Welcome back. Now it's time for Forum Daily's weekly market update with Catherine Murray, host of The Buck Stops Here. Take it away, Catherine.
Thanks, Nima. Hello, everyone, and welcome to your weekly market recap. I am Catherine Murray. Well, markets have been under significant pressure this week and continue to do so today. The TSX is down by about 1.6%, NASDAQ down by about 2% once again, really as investors continue to take to heart what U.S. Fed Chair Jerome Powell said last Friday, which is that they are very much adamant that they will continue to fight inflation by raising the interest rates. Now, recall, we've seen a bit of a bounce or a rally in the market over the past number of weeks because investors were believing that we would see a Fed pivot, meaning that the U.S. Federal Reserve would recognize that there has been a slowdown in some economic data, and therefore what they were doing in terms of raising rates to prevent demand from increasing and causing more inflation was actually working. But that is not what we heard from U.S. Fed Chair Jerome Powell last Friday. So the market is really selling off on those concerns that we will see rates rise, and that will cause perhaps a bit of a recession. The key point here, though, as well, is that even if you raise rates, it does not satisfy the global issue we have, which is the lack of oil supply. And therefore, that will continue to be an inflationary impact. So in other words, you could see stagflation. Away from that, we have seen, of course, as I mentioned, significant pressure in the markets. The Dow, S&P, and NASDAQ have been down all week, every day this week. We've actually seen the S&P close out August down by 4.2%. TSX was down by 1.8% in August, and WTI lost about 9% during the August time period. With respect to the bearish tone, adding to concerns surrounding the U.S. Federal Reserve, we've got global growth concerns. China manufacturing PMI fell into contraction in the August time period. Eurozone, many PMIs were revised lower to about 26-month lows. And although I would say on the positive side, the US ISM did beat expectations, and initial jobless claims in the United States also came in better than expected, and German retail sales surprised to the upside. So bit of a mixed picture, but nonetheless, there is a concern about a global growth slowdown. Also adding to that, many companies during their third quarter conference calls did provide somewhat of a mixed to lower outlook. We also saw many companies announce layoffs, and also we've got a renewed ramp up in China COVID restrictions, with 21 million residents in one area locked down on Thursday of this week. Geopolitical tensions, of course, are also front and center, with the U.S. restricting chip sales to China. That is actually sending huge chip players, NVIDIA as well as AMD, down by about 10% today. And also, from a geopolitical perspective, Taiwan shooting down a Chinese drone. The TSX specifically is seeing most sectors lower today: tech, healthcare, materials, and energy, as well as real estate and financials, all trading lower. Recession risk is on the rise. This, of course, more in focus following yesterday's GDP figure, which showed a slowing. And there, of course, is also more talk and concerns surrounding Prime Minister Trudeau's focus on fossil fuels, and that is at odds with other leaders around the world who recognize the need for more LNG. You can really see this in the Canadian dollar. The fact that we are such an oil-rich country, you would think that the Canadian dollar should be trading higher, particularly when you also have the BOC, the Bank of Canada, likely raising rates 50 basis points next week. You would think that we would see a Canadian dollar higher, but that is not the case because of a policy perspective as it relates to the oil industry here in Canada. We also, of course, had Canadian building permits, which declined dramatically, down 6.6% in August versus a 0.4% drop. That's what was expected. In terms of stocks in the news, a couple to note here. Disney is reportedly considering a membership program like Amazon Prime. Campbell Soup, they posted a lower quality quarter, with analysts noting that that inflation is likely to weigh on their margins going forward. Shopify did announce some layoffs, or did have some layoffs in August. And also, I would just note that Alimentation Couche-Tard, they reported their numbers yesterday, and the stock was upgraded at National Bank today. That stock's moving higher to the tune of 1 to 2%, so outperforming the broader market. Away from that, what to watch for? We've got U.S. jobs tomorrow. The gain is expected to be 300,000. That follows 528,000 prior. And we're also keeping our eyes, of course, on the Bank of Canada, expected to raise rates by 50 basis points next Wednesday. Nima, that's it for me. A lot to watch. I'll send it back to you.
All right, thanks for that, Catherine. Again, that was Catherine Murray, host of the Buck Stops Here, which airs on Sunday mornings at 9 a.m. Eastern, only on the News Forum Network.